Okay guys, it's the 12th of January, just about 20 to 8. I'm going to do the FTSE review today, the first one in 2016. So first of all, I hope you all had a great Christmas and New Year and you're all ready to have some good trading in 2016. Okay, so we've had this huge sell-off. This has basically been because of everything that was happening in China. It's continued to move lower on the weakness of oil. Now we've came down into some very important lows down here. So we've got these lows down here. Here also. So it's a very nice area to look for some buys today, in my opinion. This area could probably extend down also into the 5,850 levels. And below there, really, I want to see how the market would react all the way down at 5,770. It's a low of this very, very strong fall off. I think this was during the independence referendum. So down here is obviously a key area, and below there, I haven't actually even marked into the FTSE yet, because I want to see how it's going to react down here, if it's going to bounce, if people are going to find some value down there. So on the 5-minute time frame, so I'm hoping I'm going to get some sort of a buy signal down here. At least, you know, I'd hope it would at least push up into the pivot, up into these levels up here, the 5,900s. But it depends what happens in the market. It might just fall through. Need to wait and see. But this is going to be the important area for me today. This is where I'm going to watch most. Hopefully I'm going to get a quick buy at the open off of it. If not, I've got another level up here in the 5,900 area. It ties in with the pivot, a key daily level, R1 and 5,900 also. Above there it's 5,960, which ties in with R2 and also 5,943. So these are my three main areas I'm going to be watching. Up here, this is a very important area. It's just two daily support and resistance levels. However, let me just zoom out. So we can see it's already, the market's already reacted off here a couple of times. It's fallen down into it, pushed off, fallen down into it, pushed off, and then it's pushed up into it. It's had a strong reaction, and it's pushed up into it again. It's had a very strong reaction. So this is a very key area. This is the sort of area I'd be very confident to trade from. I'm not sure if the market will get out there today, but it's one that I have on my radar. Let me just highlight it for any time the market does get up there. So I'm going to watch the open. Going to see how the market reacts down here. This is going to be very important. If the market can stay above here, I'll just look to buy into it. However, if it starts falling through, I'm going to wait and watch and see what happens. If it does fall through, it would need to fall through a fair bit, and then it would pull back. I would consider selling into it. You can see we're already starting to get a reaction off of this area though. Okay, so I'll come back at 4:30. I'll go over what the market did, and I'll take you through the trades that I took. Okay, so the market has opened. I'm sorry, I need to resize the screen every time I record this, so it records in high definition. So the market pushed up into the pivot level. I missed this lovely move up, which is exactly what I was looking for. However, the market then collapsed down very quickly into these levels. So I have taken a blind buy down here. This is only purely because I'd identified it as such a strong level. It may give me a signal to buy also, so I could have waited for the signal. However, with it being such a strong area, I was happy to take the buy. The risk of this is there's no confirmation. The market can quite easily just come smashing through, stop me out. The benefit of blind buy and sells is you get nice entries on correct trades, and your stop can be a little bit tighter. And you can make some good percentage wise profits. So you can see we've had the reaction coming off of this zone. I'm going to watch now, see what the next couple of candles do. It may still come down and break through. I mean, the market is very negative, but this is a very important area to look for trades for me. That's why I was happy to take this trade. So we've had strong rejection here. This candle will give me a little bit more clarity. We'll see if it can stay above it or if it breaks through the area now. What I'll do is I'll probably just leave this video running for a little while. If it starts taking a very long time, I will pause it, but I'm not expecting it to take too long. I mean, this has been quite a strong move, so I would expect the market to either come through very quickly and break through very quickly and continue its move down, or to begin to push higher. I've already identified why this was such an important zone. It's tying up. I've got two key daily levels down here. And when I've got two key daily levels, it's already a very strong area for me to look for trades. It then ties in with the previous day's lows and the previous day's close. So it is a very strong area. You can see the market has fallen down into it pre-market, bounced off of it, it pushed up into the pivot and then crashed down. So I took a blind buy. Here's the risk here. You can see the market has came through and touched down here. So that leaves the market with a memory of trading down here. So that's the risk. It may crash down, come through. I'm not quite willing to take my stop to break even just yet, which also increases the risk. However, as long as the market is trading above these sort of lows, I'm happy to stay in this trade. That's why my stop's just below the lows. If it starts trading through here and closing through here, then I will know that my analysis, or not my analysis, but just the trade at this time is incorrect. So we'll see what happens. See if the market can stay above these levels. The ideal trade really would have been right here at 720. I would have entered after this candle. And I've got a rule where I don't tend to take trades before 7:30. That's when I'm willing to enter the market. After 7:30, that's when volume picks up. Although I will take trade dynamic trades before 7:30. That's the only ones I will take. Usually things like gap close, extreme gap close, breakaway trades, rarely, but I will take them slightly earlier also. So for anyone who's joining the live room, any trades like that where it does come before the room opens, there will be email updates that I will just send out to you. So we can see it's sort of bouncing around now. It's made a run down, it's pushed higher, it's pushed up, but it hasn't been able to break the high of this candle. And then it started to come down again. I'm always analysing what the market is telling me also. I'm not, for people who have followed me for a little while now, I'm not a set and forget trader. I don't just click, okay, I'm going to enter here, my target is however many points, my stop's going to be however many points, and then that's it. I believe that the market is always telling you what it's wanting to do. It doesn't mean you can predict when there's going to be a losing trade every time and you can pull yourself out, but especially if my limit order is up, I don't know, let's say I put it up here 917. If the market pushes up and starts reacting down here, I will just exit. You know, I'm not going to just let the market then come back against me and come down to break even, or even worse, stop me out. You know, it's money on the line. So if the market's giving me the evidence it doesn't want to go higher, I'll just exit. Okay, so we're still producing negative candles. This one here is looking like it may actually break through. So you can see now the sellers are trying to push this through. So we're sitting on the key daily level now. So I want to see what this candle does. Still, you know, I'm still in this trade. I probably will just remain in this trade because the lows down here. I would need the evidence of it breaking these lows and remaining below these lows for the trade to be incorrect. So we'll just watch it. We'll see what happens. I'm just putting this in because I do technically have another setup that's set up here. So I just want to see how the market reacts if it comes down here. There we go. Quite choppy price action. And this is the thing when you're trading in especially the first sort of half an hour to an hour, and it's a lot more choppy. Things move a lot quicker. I believe because the vast majority of people have not started work yet, so the market is also very heavy with retail traders. You know, people trading from home before work. As always, if I'm not talking, you can just skip along if you want. This is only really for people who are interested in the live trades as well as the review videos. What are we at? We're at 10 minutes. Will I pause the video? No, I'll just leave the video running. As I say, you can skip ahead if you want. It may turn into a bit of quite a long video. Okay, we're pushing higher. This is also why it's very important. I honestly think one of the main reasons that people don't succeed at trading, well, obviously I always go over this, it's discipline first and foremost, being able to follow your rules. But if people miss trades or lose trades, so let's say you'd came in this morning, you'd identified this zone, you were looking for the buy, you turned the computer on at 7:50, so you'd missed it. Either you try to jump on up here for a buy position, the market then instantly rejects, turns down, you close out your position for a loss, but then you try and enter into a sell position because the market is falling away. The market then falls down, you get this huge rejection, so you exit the position again for another loss, and you think, oh well, this is definitely going to be a buy position though, so I will enter into a long position. You enter into a long position, the market then falls away, you exit, you enter into a sell position, and the market pushes higher. The reason I know about this is because when I first started trading, it's exactly what I used to do. It's exactly what so many people that come to me for help do. This is the main thing you need to sort out. You need to sort out your discipline if you want to succeed at trading. Trading plans, there are honestly so many trading plans out there that are good, that will make you profit. The problem is people they learn the the way of trading. Let's say they take a course, the course is profitable, and even when they back test it, they say, oh yeah, this course works, this is going to make me money. However, when it comes to live trading, they let their emotions take over, and let's say they'd done what I just talked about today, they would have had several losses. It might have wiped out, I don't know, a full week's worth, 2 weeks worth of their trading. And the problem is, when that happens, they enter into so that's emotional trading. But then what happens is when something like that happens, they enter into what I call an extreme form of emotional trading. So they've lost, let's say they've lost their full last week's worth of trading profit. In their mind, they think, oh no, I need to now make this money back. So they completely abandon the rules. I mean, they've just shown themselves that abandoning the rules doesn't work because they've just lost all of last week's profits. But in their mind, they've lost so much money now, they're panicking, they want to make it back. So they enter into crazy trades. As soon as they see this candle moving up a little bit, they'll enter a buy. As soon as they see it pulling down again, they'll exit and they'll enter into a sell position. It's a very fast way to wipe out your account. So we're just struggling a little bit here, just paused, hoping it is going to break through. So there's nothing much to talk about. So what I will do is I will pause this video. We're almost at 15 minutes just on the live trade. So I'll pause it. If anything significant starts to happen, I will turn it back on again. Okay, so we're starting to push up. My target really is 5,900. However, if we start to react here, what I will do is I will close out 75% of my position. Oops. What I'll do is I'll just get this ready. The reason I will close out 75% up here is just because we've already had the reaction right here. And you can see it's reacted here, 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 and here. As always, I went over this a few times. When you're closing out part of your position, you just enter out the amount you want to close out up here. This is IG. I'm with IG. My broker is IG. I use Pro Real Time. You enter what you want to close out up here. I want to close out 75% of 25, which is 1875. You then have to make sure both your stop and your limit order are unticked. If you don't do this, you will just enter into another position in the opposite direction. So once that's set, I'm in a buy position. I want to close out 75% of this, so I enter in the opposite direction, which will be a sell position. So I'm going to open the window. I'm just looking for the reaction. We might not actually get it, we might just burst through. No, we're starting to get a little reaction, so I just close it out. That's me locked in profit. Change this back for future trades, like so. I'm just going to watch it, see how it reacts. It's starting to push higher. The reason for closing out 75% of the position, I'll go over it in a minute, why I think it's very beneficial. You can see it's reacting there. It may still push up, but for me, it's not worth waiting. So I just take it. So closing out 75% of the position is beneficial because you can see here the market is beginning to jitter around. Now let's say, I'm expecting this to push up, but on, let's say, 3 trades or 4 trades out of 10, this will do what it's doing now. It'll start to fall down, but it'll continue falling down. Your profit is then being eradicated for the sake of you waiting for 3-4 points. I'd rather just close out the position, part of the position where I know I'm going to see some sort of resistance, and then if the market can continue to push up, I'll close out the rest of it. If it continues to reject, I'll just close out the further 25%. So let's have a look. Gain today. So we're at £573.12. Yesterday was a good day. It was about £750 to £800. So I am just going to finish for the day. I'll come back and review what happened. I'll go over any other trade opportunities, especially the ones from the training course. With the training course, there's your entry right there. You could have taken that, the 8 o'clock candle straight away. Obviously, when you get up to here, you're showing some sort of resistance, so you just be a little bit careful. I am expecting it to push higher, to be honest, but we'll come back and see at the end of the day. Okay, guys, so hopefully you all have a great day trading, and I'll be back at 4:30 to finish this review. Okay, so it's 20 to 5. The FTSE is now closed. We're on the daily time frame to start off, and as we can see, we have produced a doji candle. Now, the market was actually up around about 2% in today's trading. However, it then sold off into the close. So if we go onto the 5-minute time frame, let's have a look at what the market did. So my position was from down here. This I suspected there was going to be buyers coming to the market down here, so I took a blind buy. You've also got your signal candle right here for a buy position. The market then pushes higher. It pushes into the next zone where we get a sell signal. Let's have a look. The market then falls down almost 18 points. That's taking into account the spread also. It fell off about 18 points. It then reversed and pushed higher. Now, whoops. What you need to be aware of when the market is pushing up like this, first of all, this is fine for a sell position. This is fine for a buy position. The market then pushes up, sells off a little bit, and then pushes higher again. Now, when it sells off a small amount like this and then pushes higher, we break out of the zone. For me, this candle here is breaking out of this zone. This candle is trading out of the zone. There's no tail, nose, or body of the candle touching the zone. So this is the market breaking out. We then get a pullback. Now this is a very small pullback. It's pulling back into the zone. However, we're producing a high here, a low. This is a higher high. It pulls back a tiny little bit. It then produces another higher high. And this is your pullback, which is a higher low. So this should be evidence that we're into a very strong upward move. The pullbacks are small. This one is 1 candle. This one is 3 candles, but one of the candles is a doji, and this is almost a doji. It's like a spinning top. The market pulls back into this zone, into where I would have been looking for a continuation trade, a buy signal. However, I just don't have any buy signals there, so I would have left this trade. However, this would have been the ideal place for a buy position. The market then pushes higher. It pushes up into this zone. I believe I mentioned earlier this morning, this was a less important zone for me for selling. This is a fine selling position. Signal. It worked out very well. However, I'd be more interested in up here. I believe I mentioned that on the video this morning, and also up here would have been a key area. We push up, we get a pin bar. For me, this would not have been a sell signal, purely because we've made this very strong run up. Everyone who's taken the training course, you should have been looking for evidence that the market was running out of steam before you considered a sell position. The market then pulls back. We get a very strong bullish candle, and then for me this would have been a sell signal here from what it looks like. It looks like a piercing pattern. I'm just going to double check. Yep, so this is a piercing pattern. This would have been where I would look to get short, enter below the low. The market falls down, and let's see how much it moves against us here. So it moves against us, this is including the spread, 26 points. And this is why it's important that your stop isn't very close to your entry. Everyone who's taken the training course, your stop should have been nowhere near up here. You all know how to set your stops, and it will have saved you today. Now let's have a look here. The market it then comes down and it pushes higher again. But when it's pushing higher, and you can see these pins, it is failing to make a further bullish run. You've got to remember, this has been a very strong run up. However, this market is still negative. It's very negative. So up here, we push up, and then we're producing pins like this. The market then comes down, pushes up again. We're getting pins when we get up to these highs. We trade along, and then this candle here. This is the candle where if the buyers were going to step into the market, if it was going to continue its bullish run, this would be where it would happen. The market is pulling back almost into the zone, to the R2 levels. You can see the buyers step in. We then get a strong bullish candle. It's much stronger than all of these candles here. We've basically been ranging sideways here. We get a very strong candle. This is why it's important not to ever panic when you're trading. You have to wait and see what the market is telling you. We got a strong bullish candle, but then the next candle here has a tail. The next candle is a doji candle with a strong tail showing rejection, and then the market sells off very strongly. So this is why it's important to let the move play out, basically. So a lot of people, especially beginners, I know they would have seen this move here, and they would have closed out their position. This is why it's important to wait. We've already identified this is an important area in the market. It's a very good place to look for sell signals. You got your signal to enter into the trade. Moved against you. You got some heat. But if you just held onto the position, you can see it worked out incredibly well. You've got a huge sell-off all the way down. We then bounce higher and continue down even further. So it was a nice trading day. Unfortunately, it didn't have a buy signal here. This would have been ideal. However, there was a buy signal here. Let me just delete this. A nice buy signal here. A nice sell signal here. The market then pushes up. All the way up. We start to run out of steam up here. We fall down. We push up. We get a piercing pattern right here. And it turned into a very nice sell position. So hopefully that was helpful, guys. As always, I'm going to leave the address for the training sites on this video. How to trade the 5-minute time frame, how I do it. All the information on the training site is on that website. So if you email me asking about the training site, I'm just going to direct you there. It's got all the information on it. It should outline everything that you need to know, basically. So hopefully that was helpful, guys. As always, please do subscribe to Decisive Trading if you are learning how to trade. I hope you have a great rest of your trading week. I'm James Orr, and thank you.